Hi guys, Nate here from NK & Co. Welcome to another little quick tax tips time here. So tax season just around the way, 10 weeks in fact, quite scary I know. Where does the time go? So with this tax time, my suggestions there for you are, like every year, it's all about being organised, and it's all about making sure that when you do set those appointments, either with NK & Co. or with your accountant, that you are in fact prepared. So some of the quick tips for preparation: making sure you've got your substantiation. Most accountants are going to prefer it if you've summarised those expenses. It allows them to spend a little bit more time talking to you on your circumstances rather than just punching the numbers into the system. Okay, so certainly for our clients here at NK & Co, we have everybody upload everything into our document portal, as we're a paperless office and we like to keep it all really streamlined. This does a couple of things. One, it means that when you have your appointment, we get to spend that 45 minutes with you talking about your tax situation, and we don't need to worry about whether or not you've got the evidence for it because you've already uploaded. It also means that in the event the ATO was to give me a call and ask me about the substantiation and justification for some of your expenses, I can pretty quickly send it across to them and keep them at bay, and be able to reassure them that in fact what you have claimed you are entitled to claim. So a couple of good things there. One, be organised, and two, if you've got the opportunity of having those files stored electronically, it makes it really easy in the event that questions may be asked. Secondly, it's about looking at what kind of expenses can you consider prepaying prior to the end of the financial year. So the biggest thing to take into consideration with tax is it's date-based. And that means on the 30th of June, if the transactions don't show up as being the 30th of June, they're not deductible in this financial year, they'd be deductible in the next financial year. So if something happened on the 1st of July, even though you felt that you billed it on the 30th of June, if the documentation shows 1st of July, it wouldn't be deductible until that financial year. Keep in mind that when you are claiming expenses in certain circumstances, there are thresholds as to the amount that you can claim in one hit, and we call this depreciation. So certain items for individuals that exceed $300 will need to be depreciated. For small to medium-sized businesses turning over less than $10 million, there is the accelerated depreciation. So for small to medium-sized businesses, there is the accelerated depreciation that's currently available here in the 2018 financial year. So consider that. What this simply means is if you have spent less than $20,000, then it means that you can accelerate the depreciation time. So let's say, for example, an item may ordinarily have needed to be claimed over 5 years. With these accelerated depreciation rules, it means that you can write it off straight away. Do suggest though that you treat it as a normal sort of depreciating item in your balance sheets for businesses. Keep records just in case there's ever any changes to legislation and these sort of rules become what we call repealed, and then you would need to revisit those things. So having that information on hand is important. But as it stands, you would be entitled to claiming that instant accelerated depreciation, which is really beneficial for small businesses. For individuals at this stage, there is just the regular regulations and depreciation rules.